Hi everyone. Good morning. We hope you all will enjoy and understand this video. Today we will discuss about part 5, which is overview of financial markets. The questions will not be shown. Please refer to your Ipass questions paper. Question 1. The answer is merchant banks, foreign banks in UK and consortium banks. Retail and clearing banks are terms applied to the primary banking sector. Question 2. The correct answer is D. A high level of borrowing from individuals or by the government, and government action to tighten the supply of money, could all result in upward pressure on interest rates. Question 3. The correct answers are commercial paper, certificates of deposit, deposits, and bills. Shares raise long-term finance from the stock market by issuing shares. Question 4. The correct answer is $808. The calculation is as follows. Only the interest payable was required. Question 5. The correct answer is B. A bank must make profits for its shareholders. A bank must have enough liquid assets to meet depositors' demands for cash withdrawals. Depositors must be satisfied with a bank's security. Question 6. The correct answer is A. It is because the stock exchange is a capital market. Question 7. The correct answers are banker to the commercial banks, lender of last resort, banker to the government, and managing the national debt. The Bank of England acts as banker to central government and the commercial banks but not as a bank offering long-term loans to companies. Question 8. The correct answer is A. The exchange rate of sterling established in the foreign currency market. Using the basic principles of supply and demand, if the price of sterling is too high, the bank will sell sterling to increase the supply and thereby reduce the price. Question 9. The correct answers are sterling commercial paper market, certificates of deposit market, finance house market, and interbank market. Government bond market and London Stock Exchange are examples of capital markets. Question 10. The correct answer is C. It is because Meishan Bank act as market makers or brokers. They normally act for corporate clients, not for individuals. Question 11. The correct answers are banker to the government, manager of foreign currency reserves, lender of last resort to the banking system, participants in international economic institutions, and manager of national debt. Question 12. The correct answers are offering foreign exchange facilities to customers, financial intermediation, providing a payment mechanism, and lending money and taking deposits from individuals and firms. Question 13. The correct answers are high resource costs associated with constantly changing prices, and hyperinflation may result. Imports will be comparatively cheaper, not more expensive than exports in a country with high inflation. The effect on business confidence of inflation would be to reduce investment rather than increase it, and the redistribution of wealth would be from creditors to debtors, not the other way around. Question 14. The answers are advances, treasury bills, investments, and operational deposits with the Bank of England. Customer deposit are liabilities of a bank, since these are repayable to the customer. Next, we will discuss Part 12, which is sources of finance, gearing, and EPS. Question 1. The correct answer is A. The annual interest received divided by the current tax interest market price of the stock would give the yield if the debt was irredeemable. The total rate of return on loan notes, taking into account capital repayment as well as interest repayments, is the overall redemption yield. Question 2. The correct answer is C. Interest is usually an allowable deduction for tax purposes, but dividends are not. Investors cannot usually claim tax relief on interest received but may benefit from a tax credit on dividends received. When a company takes on debt finance, it is committed to paying interest, whereas dividend payments are more easily avoided. Question 3. The correct answer is A. This is the calculations between overdraft and loan. Interest is only payable on the overdraft when the account is in debt. Interest is payable on the loan even when the company has spare cash. Question 4. The correct answer is B. EPS is not appropriate for comparisons between companies because the REIT depends on the number of shares in issue, which is not an indication of profitability. It would be appropriate to use EPS to compare profitability of one company over time, assuming the company does not issue more shares. Question 5. The correct answer is C. Preference shares are shares that have a fixed percentage dividend. They are therefore more to debt capital than to equity. Convertible loan notes will not be classified as equity before it is converted. Loan notes is the term of debt capital. Question 6. The correct answer is A. Venture capital is high risk and is not normally available to listed companies. It normally takes the form of equity finance, although it may take the form of debt finance. Question 7. The correct answer is D. This yield is the total return received by investors. If all the investments have the same yield, then investments which have a high coupon will have a lower redemption value, and investments with more coupon payments will have a lower redemption value than short-dated stocks. Question 8. The correct answer is A and D. Overdraft, trade credit, and debt factoring are all sources of short-term finance. Question 9. The correct answer is C. The holder has the option to convert, but he will only convert if it is advantageous for him to do so. Question 10. The correct answer is B. Showing a lease commitment on the lessee statement of financial position is only requirement for finance leases. The lessor would normally expect to lease the equipment to someone else or to sell the equipment at the end of the lease. The lease term is therefore usually less than the useful life of the asset. Question 11. The correct answer is B. Statement 2 is incorrect because venture capital is risk capital, and although unsecured bank lending can be thought of as a form of venture capital, secured loans cannot. When a bank asks for security for a loan, it is looking for a second basis of repayment in the event that the first basis fails. Question 12. The correct answer is A. 12.5. B. 24 times. The calculation are as follows. Question 13. The correct answer is A. The gearing is neutral when there are equal amounts of debt and equity in the capital structure. This is the situation described by a ratio of 100% on this basis of calculation. Question 14. The correct answer is C. The calculations are as follows. Question 15. The correct answers are preference shares, bank overdraft, and loan notes. Question 16. The correct answer is D. Sales and earnings are expected to rise, not to fall over. If conversion takes place, the firm's gearing ratio will change. No extra capital is generated on conversion. Question 17. The correct answers are A, C, and D. Using cash or short-term bank loan will not affect any element of this ratio. Question 18. The correct answer is 36.8%. The calculation are as follows. Question 19. The correct answer is short-term loans is 0 to 1 years. Medium-term loans up to 5 years. Long-term loans is greater than 5 years. Bear in mind that time periods are not set in stone but are good indicators of the type of loan required. Question 20. The correct answer is A. Samstone will own the machine and pay for it in installments. It can claim tax relief on higher purchase interest and tax allowances. Question 21. The correct answer is D. Factor 1 will make Treasury managers seek a balance between long-term and short-term borrowings in their debt portfolios. Factor 2, excessive cash holdings but locked-in long-term debt or short-term cash deficit and the need to short-term borrow are likely to increase on short-term borrowing facilities. Question 22. The correct answers are fewer bad debts, quicker cleared funds, and more sales volume. The problem of bad debts is less with credit cards than with checkies. If the retailer uses the card net service, cleared funds are available one day later, faster than with checks. Credit cards are widely used, and if retailers did not accept them, sales volume would almost certainly be much lower. Question 23. The correct answer is 6.5 times. This is the calculation. Question 24. The correct answer is D. Floating rate bonds, which are bonds on which interest rate altered periodically to bring it into line with current market rates of interest, become more attractive to both borrowers and lenders when market interest rates are volatile. Deep discounted bonds do pay interest. Question 25. The correct answer is B. Interest is only paid on the amount borrowed, not on full facility. Question 26. The correct answer is D. A bank loan is not a type of venture capital. Venture capital do not normally provide finance to companies with a stock market quotation but to smaller expanding operations. Venture is often used to finance management buyouts. Question 27. The correct answer is A. This is because more shares are now in existence. Question 28. The correct answer is B. An overdraft should be used to finance short-term assets, whereas a term loan could be for short, medium, or long-term. An overdraft is repayable on demand and can be withdrawn by the bank any time. Question 29. The correct answer is C. A flotation is unlikely to improve the owner's control. In fact, it is likely to involve significant dilution of control to a wider circle of investors. Question 30. The correct answer is D. This option should be rejected because a bank loan would create a long-term commitment. The option to increase payables would reduce cash outflow in the short term. A reduction in receivables would increase cash inflow in the short term. A bank overdraft would provide cash to improve the short-term deficit. Question 31. The correct answer is A. The most common methods of flotation are placings and offers for sale. Offers for sale are bigger and all the shares are offered to the general public. Placings are smaller, and although some shares must be made available for the general investing public, most are placed with a small number of institutional investors. Question 32. The correct answer is A. The matching principle of finance is that a company should match long-term finance to long-term funds and use short-term funds for short-term assets. Long-term finance may be debt, equity, or preferred shares. That's all for today. We hope you all will understand this video. Thank you.